IT major TCS will kick off India Inc.'s earnings season for the second quarter of this fiscal year on October 10. A slew of IT companies like Wipro, HCL Technologies and Infosys will follow suit. In the previous quarter of this fiscal, corporate earnings saw double digits growth, driven by banks, NBFCs, oil and producers and FMCG companies. A business standard analysis showed that the combined net profit of nearly 3,000 listed companies had increased 22.4% year-on-year to 2.2 trillion rupees. However, higher material and energy costs dented margins in Q1 FY23. EBITDA margin for the entire sample was down nearly 410 basis points year-on-year to 22.5%. In Q2, however, bottom line growth is likely to suffer due to higher operational costs and inventory losses. Top line growth, meanwhile, may stay in double digits. Among sectors, top-tier IT firms are likely to post sequential revenue growth of up to 5% in constant currency terms amid demand concerns. Financials and automobile companies, on the flip side, could outperform in Q2 FY23.
In the coming Q2 results season, financials and autos are likely to come out with very good results. In financials, private sector banks like ICICI Bank, Kotak Bank and Axis Bank are likely to lead with excellent set of numbers. In PSU banks, Bank of Baroda and State Bank of India are likely to post very good results. In autos, passenger vehicle segments and commercial vehicle segments will come out with good results. In two-wheelers, Eicher Motors will come out with an excellent set of numbers. In IT, the results of Q2 will be good since the demand has been good during Q2, but there are concerns in the market regarding the slackening demand for IT services in the coming quarters. In other segments, capital goods, telecom, specialty chemicals, and domestic demand facing pharmaceutical companies will come out with good results. Apart from these segments, individual companies are likely to post very good results. A very good example would be Titan.
Moreover, analysts foresee metals, IT and oil and gas to underperform in the quarter under review. This, they say, could downgrade Nifty EPS for FY23 by up to 3%.
Overall, for India Inc., we could see double-digit top-line growth. The performing sectors would be auto, FMCG, chemicals, especially specialty chemicals, BFSI, and those expected to underperform would be metals, IT and oil and gas. The bottom line will suffer mostly due to operational cost inching up as well as inventory losses. Industry has been stocking up raw materials due to continuous rise as well as supply chain issues. But now with the prices retreating, we could be looking at inventory losses. The surprises would be specialty chemicals, which would be the biggest beneficiaries of disruption in Europe, and pharma could be the other one. Continued attrition and increasing operational costs along with slower order flows will keep the pressure on IT stocks. Overall, I would expect a slight downgrade in expected EPS of FY23.
Today, investors will closely watch out India's services PMI data for September. Besides, global cues, rupee movement, FII flows, and crude prices will continue to dictate markets on Thursday.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.